Good evening, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up. And this wrap-up is for Monday, the 20th of December, the last day of fall. Can you believe that? I didn't realize that. It's what it is, 2021. So let's talk a little bit about this. It was an interesting week. First of all, we knew Omicron was going to get worse. You know, that we've heard it in the news. You don't need me to tell you this. I'm no medical expert. I know as much as the man in the moon, but I know how to watch TV. I know how to read. And you keep hearing the reports. This is nothing. The waves are going to get worse. They're even discussing not holding Times Square not holding a New Year's Eve again in Times Square with people present. So they're going to give us that decision. You're going to see plans everywhere for New Year's Eve possibly get canceled, because while Christmas is right in front of us this weekend, New Year's Eve's 2 weeks away, and the numbers are going to only get worse. They're going to pick up. You don't believe me? Just look at Europe and understand the time difference, 2 to 3 weeks, as to where they're at from where we're at. And we're at the beginning of where they're now further along, and they're not even peaking yet. Netherlands has shut everything down. Restaurants, bars, movie theaters, you name it. They're just shut. They're not opening to the 14th of January. Portugal's discussing that. Italy's discussing shutdowns right now. And it's just getting worse. China, you know, it's spreading from city to city. We don't hear enough about it, but they're in trouble there. And that hurts demand for goods, too, because you got to worry what happens to the factories, the output. Is this going to hurt the supply chain issue again? Big issues. Okay. Then the other part of the market that came apart was President Biden's Build Back Better plan, when Joe Manchin said no, he's not going to vote for it. You know, he's been really honest, I think so, and he's been telling his fellow Democrats that no, this plan doesn't work, and your idea, let's fund these things for a year or two. Last Friday I was saying that makes no sense. And it doesn't make sense. So you say goodbye to it. Plus, do we need more inflation when the Fed's turning its eye to inflation? That inflation scenario, though, is a dangerous one. I like the Treasury market. It's monstrous. It doesn't get moved around very easily. And it is not acting like a market where everything's inflationary right now. The yields are low. The curve yield, I know people will say, oh, well, Ira, you just wait. Whenever we get that inversion, stocks break. And they're right. But who says it has to do that? It can be correcting and then go this way. I mean, it's a seesaw. It can be both ways. I said it before, and I'm going to repeat the camp I'm in. I want to see, as we get into the end of the first quarter, what the supply chain issue looks like. Is it as inflationary and stay inflationary, Omicron, all that taken into account? That's the numbers that I have to see for me to believe that these dot plot ideas that just came out have credibility. I know that there's credibility to what they think now, but 3 months, 6 months down the road, will those same people not change their opinion, or are more going to say, no, the inflation's even worse? I don't know, but I know charts, and that's what I like. You're filling the gap right now in Tesla on the downside. I think the bottom pickers are going to show up right now. I got the break I wanted in Apple. I've already hit the downside targets I was looking for. AMC. Now, come on, Spider-Man, that rescued the day. I know what it is to have a big hit, and they were selling popcorn and food and everything else, and that's the profit center in the movie theater, and they got themselves a heck of a movie. It's got legs into Christmas. Yay. All right. If you look at Tesla, there's your gap. This is where you're at. When we start going through the chart now, you're still in a downtrend, and you have been since up here. Lower highs, lower lows. I know that you know I've been telling you I think the market's bearish. You've been under the 18-day average, downside. Potential targets could be the 100-day average at 880.20. And the lower Bollinger Band at 882.14. Didn't hit them today. You're within a hair's breadth of it. Sometimes the pros start stepping ahead because this is the zone that they're looking for. That's what I think. That does not mean I am telling you run out and buy it. I am telling you it's on the downside. The easy money is over. whatever easy means. But I think we did a pretty good job, at least I did here, telling you I thought it was going to try that gap. Now, are we embedding? Okay. So the answer, not here. Both numbers are not under 20. Day 1, Thursday. Day 2, Friday. Day 3 today. You're embedded. So the bounces from here until the red line closes back over 21 are going to be sold, in my opinion. Now, there's a way that you sell them. It's taught in my enhanced Bollinger Band course, and I'm certainly not giving you how to do it here for free. Don't expect that. Just go to our website under the word education and learn. Can I be easier with that? But I am looking for that to be the case that starts developing here in the chart. On Apple, all that I was looking for when you lost the embedded reading was when the market lost it the second time, and you'll see it, was for us to go to the 18-day average of closes. Watch, you lost it right there. So this was Thursday, this is Friday, and thank you. I don't care what it does now. This part completed itself. To get short this market and put a stop from here $13 away, you're not going to get me doing that. That's a 10% stop. Way too big. AMC, as good as these numbers were, you're coming off a new low at 21. You do remember when this chart was up at 70, and I was telling you here, I have owned movie theaters. Keep selling the stock. Let the suckers buy it. Just keep issuing. I said it. I've got the videos to prove it. So you went from 70 just now to 21. Thank you, Ira. If you know a business, which I know, that business, I understood, and this is still nowhere near out of the woods. They got a great hit, and I applaud it. I know how hard that industry is for these people. We'll see what happens right here now. But this is a whole resistance area the market's coming in. In ARC, Kathy Woods has done a real good job of talking up support for the way she trades, her thoughts, the 5-year plan that she comes up with. It's still, this has done terrible this year. It was 160 at the beginning of the year. It's right now 94. Other things have done just phenomenal. Okay, but she believes in what she's doing, and she has a major following. If they believe in her 5-year plan, you know, she's picking up things, closing her eyes, turning around and saying, as long as that industry is good and the fundamentals don't change, I believe we're fine. The chart is bearish. In XLI, you got down today to the lower Bollinger Band. What would I be telling you? Now try to imagine I'm at a ball game and I'm a cheerleader. Cover shorts, yay team. That's what you do on the first challenge of a Bollinger Band. I don't care how low it goes. That was the big break you were looking for, and when you look back at these in a couple of days, you'll say, darn it, that was a pretty good area. XSD, well, are you going to ride the band or not? Here's what you did. You got to the band, you came back up to the 18-day average. You got to the band, you came back to the 18-day average. Then you fell back to it, but now what you're doing is you're riding the band a little bit. You're oversold. The pattern changed. You were getting those immediate springs. You could ride this a little bit lower is my point. I love the semiconductors. All right. I think that on this big break, this washout, I think you're going to see major fund movement into the semiconductors. But there's a place to do it. I covered it for my subscribers over the weekend. Not you. There was nothing on the weekend on YouTube. It's Christmas. I'm not going to do every week. I probably won't do one at this weekend. I may not do one for January, but I'll do them during the week as we have trading days. Lower highs, lower lows, sort of riding the momentum. And what else do you have in the cannabis? You're embedded. So as long as you stay embedded, you know that on rallies, I'm going to be saying I think the pros are going to sell short. There's a way to do it. It's got 2 steps that have to be met in order to do it. And I'm not going to tell you what they are here, okay? But they're there in the course, and they're there in my morning subscriber videos. And we've been going through it. I like CNBS. I like it better than the THCX. I think it's a better looking chart, by the way. And XHB, the home builders. Well, what do you do the first time you hit a Bollinger Band? Do you want me to go back and be that cheerleader again for you in front of a game? Probably Notre Dame, since they're in our backyard. I know you don't. Again, cover the short. That's what today is. That's what I think the market is saying. XLE. Okay, so you were on Friday. Let me take you to this right here. We're looking for the Bollinger Band. You're 16 cents away. The trend is down, bias down, momentum down. Major support area here. If you get into that area and you were next to me, I'd hit you like that with the elbow and say, what's wrong with you? You're short. You got to take money off the table. And that's where you're at. EEM. Bearish and still falling. Now this one I told you had a real problem. I said if we're in trouble, why do you want to own anything with the emerging markets? And that's proven to be good. This is a new low for this whole thing. And yes, I understand covering shorts, and I would have said that without a question and did right through here. I want no part of even telling you where this market might go. If we're no good in the near term, what are they? Worse. Gold. Gold's problem is it just doesn't want to bite the apple, the golden apple, as it should be, and say, I'm with you, baby. It's inflation time and I'm going to go. This is disappointing. The Fed chair's telling you they had to change their policy, and gold's not buying into it, going nowhere. Yes, it rejected staying under in this market, 164, but it really hasn't gone anywhere. $5 rally's nothing to write about. GDX is the same thing. If gold's no good, well, how can this possibly be okay? You do understand this is what they haven't mined, right? Or what they're mining right now and they're getting is profits. Gold's down a bit. Okay, it's not saying to do anything. It's not bearish, by the way. Copper, what would I be saying right here? Cover your shorts. The market hit the lower band, downtrend, objective hit. If it gets back up here because you're not oversold, I'd be telling you sell it again right into that. Stop over these highs right here. Target back there. That would be the way that I'd be talking about this. Here you are. Guess what I told my subscribers? I don't mind saying this and I can prove it for any regulator. As the market was here, I'm telling them, I think you can go short that market. I certainly said it in real copper. And talking here, I said, I told the traders, but then when it started breaking, I told them you got to start covering. Because at Christmas, you don't always get the follow-throughs you think. So you want to start pulling in parts of the market, like natural gas as it's been breaking down, same thing. So the next chart is TLT. Well, this turned bearish today. You have an outside day down. Lower highs, lower lows, too oversold. One of the things I teach in my full charting course is when you get a reading under 30 in slow stochastics, even if it's a new bear signal, I walk away from it. And so that's what I think. And you're about as neutral as you can be in a tight Bollinger Band phase and FXE, too narrow of a range to trade. From the high to the low, what are you going to make? $1. It's too narrow. So I tell traders, walk away from trades like that and look at something else. So one of the things that I want you to look at is what my futures traders look at. Why? Well, let's think about it. You're trading SPY, DIA, QQQ, TLT, GDX. You're trading. Do you understand what I'm getting at? Copper, COPX. Learn what the futures are doing. That's what this move in that market. Those funds are based on the futures. So if you get what they're doing, why not look and see what we're writing about so you get yourself a bit of an edge as to what the futures traders are looking at, because at the end of the day, that's what these spiders and ETFs that are directly, the word is directly related to those, look at. And that's certainly the stock indices. It's certainly some of the FXEs that we just went through. It's certainly TLT. I can go on and on. How do you get this? Just go to our website, top left, free offers, take a look at them and go from there. I'm Ira Epstein. Talk to you tomorrow.